All right, y'all. So in today's video, I want to go over how I personally trade head and shoulders patterns. Now, I'm currently in a short trade right here, and I consider this a head and shoulders trade. Now, if anybody doesn't know what a head and shoulders is, it's basically when you have an area of support as such right here, and then we have a high to the support. This is the left shoulder, a higher high back down to the support, that is called the head, and then we have a lower high back down to the support, and that is called the right shoulder. And the way most people trade this is they take a line from the top of the head to this called the neckline, and then they project their target down from the breakdown to the end of the line. And basically, guys, this is if we're going to trade these, I'm not going to say that this is not a good risk to reward ratio, because the way you would do it is you'd put the stop loss above the last little high you made and then set your target down here. And you can see that we do have a good almost 4-to-1 risk reward ratio. But I would like to say that this is the wrong way to trade a head and shoulders pattern, and there's a much more profitable way to do so, okay? Here's how we have to understand the markets when we are looking at patterns like these. First of all, it's very important to understand that regardless of what asset we're trading, the markets are always going to be establishing and forming sideways ranges, okay? These sideways ranges allow us to buy low and sell high, okay? They allow us to buy low and sell high. This is Bitcoin, and as you can see, for the most part, Bitcoin is always establishing these sideways ranges. We have one here, right? And then we break out from it, and we have another one right here. We break out from it. We have another one right here before the big drop. We have one right here for the past 2 days. And now today we've been trading in one right here, okay? This is how I was able today to take a short trade from up here earlier this morning, okay? Took a short up here earlier this morning. Took a long trade down here. And then I was able to then get in the short from right here, because I understand that I'm looking to short the high of the range. Okay, we can see this is clearly just a sideways range. Take a short from the high, take a long from the low. And this morning in the VIP Discord, guys, I mean, I was looking literally to take a long from this area right here, because it was the low of the range. And just looking at ranges, this is how we were able to take very, very juicy trades, like the massive, massive long trade that we took from 18,555. Setup was given in advance. And the reason why we were looking to take a trade from there is because it was the bottom of this very massive range. We were looking to take a long from the bottom of this huge range that spanned from 25K all the way down to 19K, right? And the more specific setup was given right here in the VIP Discord to take out that key level of 18,555 with bullish divergences, which we absolutely did. And that gave us this very crazy move. And then even the short trade, you know, from the actually no, that was a scalp short that we took. We've been scalping, we've been long and shorting this the whole time. But basically, this is the short trade that I was looking at from that 22.6K area, which just so happened to be the 22.6K area was the high from right here. And the reason why we were able to take the short from right here is because, again, we are looking at these sideways markets, right? It's just a support resistance flip confluence with other levels that we had there, right? So we have to understand these sideways markets, first of all, when we are looking for trades, okay? And we don't need fancy tools to do this. We can just use our eyes. Now, the second thing we have to understand about head and shoulders patterns is they're considered reversal patterns. Why? Because if we are in an uptrend and we're putting in a high and a higher low and a higher high and a higher low, and then we start to put in a lower high, what does that possibly mean? That possibly means now a trend reversal, which is what we have gotten here, okay? Now, I like to always trade my head and shoulders patterns not from the breakdown, because here's the thing. If we're trading it from the breakdown, this is a very kind of bad risk to reward ratio, because in general, we won't know if we're officially in the downtrend until we have now put in a lower low. If we're entering our short right here after this breakdown, we don't know if this is just a a swing failure pattern or something like that, right? So there's a few things that we can look for to get into our head and shoulders short from a more advantageous place. In this case, we're shorting from a high, right? Instead of taking a short from the low, right, we're taking a short from the high. Again, remember the whole sideways market thing. This head and shoulders pattern here is really just something that's happening within the context of high, high, low, high, low, and now we're taking a short again from the high, right? Market structure is very, very important. Now, how can we identify if this right shoulder is in fact a good short setup to take? Because think about it, if we can get into a short from here, this is an excellent risk to reward ratio. Because if we're shorting here, then look at this. I mean, it's just, you can't get better. You cannot get better than that, right? You really can't. That's a 9-to-1 risk reward, right? If we're just taking it back down to the potential low of this sideways range, and this is a well-established low here, right? I mean, this low we did once, twice, 3, 4. This would be now the 5th time we're targeting down to that low. This is a 9 to 10-to-1 risk reward ratio. Well, here's how we're going to actually get the setup from this. The first thing that we have to do is we have to identify that a head and shoulders is potentially forming here. Now, the context of this whole thing is that we longed from down here, okay? Now, I actually did add to my long position when we bounced off the golden pocket this time. I compounded it. I took a little bit more profits out here, okay? I was actually aiming for this golden pocket, but when I saw this big rejection, I took some profits out here, okay? So that increased my entry. But, you know, I'm long from the low, and I'm hypothesizing here that we might not actually get back up to that high, okay? I'm hypothesizing that we might not actually get back up to that high. Now, what we are going to do, as soon as we see a potential head and shoulders pattern forming, we need to ask ourselves a few things. Number one, did the head of this head and shoulders come up to a key area of resistance, okay? We first need to identify if this is a rejection from a key area of resistance, because if the answer is yes, then when we see that we're bouncing from the neckline and starting to put in a lower high, we can tell ourselves this was a rejection from a key area of resistance, meaning there's a good chance we could reverse here, and I would like to get into a short on that first lower high, okay? So the first question we need to ask ourselves is this head, okay, at a key area of resistance, right? So we're looking at the macro range, and we're asking ourselves, and by the way, guys, if you want to learn all this stuff, you could check out the course, jasoncaspertrading.com. This is the comprehensive trading course that will give you that point A to point B system so that you can always have a plan on where you're looking to take your next trade. Knowing where to put your stop loss, your take profits. This is how we get these setups in advance, like the short from the exact high or the long from the exact low. And by the way, if you want to join the Discord where we give technical analysis every day, not signals, but TA, you can go to patreon.com/JasonCasper. We have a great community of traders in here posting very, very good, high-quality technical analysis. Patreon.com/JasonCasper. So the first thing we need to ask ourselves is, are we coming up to a key area of resistance? Well, we know that this is our range right here. Okay, in general, this is our range, the high and the low. So the answer is we're not coming up to the high of the range, but are we coming up to another area of resistance within the range? Well, what I like to do is I always like to pull my fib from that most recent high to the most recent low. Now, the way you're going to pull your fib is you're going to come over here to the Gann and Fibonacci tools, go to fib retracement. The way I set mine up here is I just put on the 618, I create one and make it 0.65, and then I put on the 786. And if that head has gotten a rejection between the golden pocket and the 786, that is considered a significant high, okay? And then what we want to do is, from that initial head, right, from the initial head, where we know we're rejecting from a key area of resistance, to the neckline, back down again. Remember, this is our head and shoulders pattern. Then what we want to do is we want to pull a fib from the head to the neckline, and we want to look and see where this potential lower high could come in. Now, again, we're going to look at that area in between the 786 and the 618, okay? if we come into this box in between the 786 and the 618, this is going to be the area where we look to short the head and shoulders pattern, right? We have to be one step ahead of the markets. We have to say, okay, I see a potential head and shoulders forming. When we're like right here, right, when price is here, we pull out the fib. Okay, so my long just got stopped out, and I just hit a take profit now on the short, as you can see. So I made 350 bucks on the long trade. And now let me actually scoop out a little bit more profit here on that short trade, just so I can get an even hundo, right, for the day. Okay. And now we just move that stop loss to the entry, right? Just scalping here. This is my scalping account, right? Just taking these little trades today. Okay. Now I'm honestly targeting much lower with this scalp trade right now. But when price is here, we pull out our fib, and as we're coming up to this area, we want to look for two things. Number one, bearish divergences on our oscillator. All right. Bearish divergences on our oscillator. This is market Cipher B. This is my favorite indicator. But we see two very important things. Number one, we see as the price is getting higher right here, we come up to the golden pocket, we reject once, we come up a second time, put in a higher high with that wick. We're getting lower momentum wave on the 1 minute. In addition, we are getting a trigger wave on the 1 minute as well, as we can see that we came oversold, okay? And as we got bearish divergence up here, right? And then from this high, we put in lower high. We can see that just in general, the momentum is getting lower. So we see bearish divergences. We see bearish direction on the oscillator. The second thing that we want to look for is absorption. Now, if anybody is unfamiliar with what a divergence is, let me just clarify one more time for us. A divergence is where price and momentum are doing the opposite thing. So if the price is putting in a higher high, as it is from here to here, it's very slight, but you can see it, and the momentum is coming from here to here, this is a divergence. And if we can see this with other indicators as well, I prefer market Cipher B because it's far superior to other oscillators. Let me see if we saw something like that on the RSI. Yep, also on the RSI, we see that as the price is putting in that higher high, the RSI is putting in a lower high. That is a bearish divergence, guys. That is what a divergence is. Now, the second thing, and this is going to give us a surefire, not a surefire, but a very high probability setup, is looking for absorption. Now, what is absorption? Absorption is where we see price making either a lower high or an equal high, okay? And CVD getting higher and open interest getting higher. Now, what are these things? Okay, let me explain. Actually, let's pop back onto our chart here. Did we get a bounce from the 786? Not on the USDT pair. We did not on the USDT pair. Let's check out on the USD pair quickly, because this could also be a nice long opportunity right here. No, we actually front ran that. Yeah, we front ran it. Okay, so what is absorption? Absorption is where we can see trades being absorbed by whales who are looking to push the price in the other way. Now, here's what I mean by that. Okay, if you see that price is putting in a lower high, and you see that open interest is putting in a higher high, CVD is putting in a higher high, and you see that open interest is also in general getting higher over time, right? This is telling us that there is absorption. So let me explain what these things are. Open interest is showing you, are there active participants entering the market or not? If this is getting higher, this is telling us that there are new traders entering into the market with real capital, and that is what is pushing the price to the upside. If open interest is getting lower, as it is right here, this is telling us that this move to the downside is not fueled by new shorts opening. It's actually fueled by longs closing. Longs are taking profit here. They're closing out their positions. That's giving us a little bit of a move to the downside, right? But this move to the upside was fueled by an increase in open interest, showing us that this is actually fueled by people buying. They're hitting the buy button. That's why price is going up, right? That's why price is going up. And so if this is going up, we know new traders are entering the market. If this is going down, we know traders are exiting the market. Now, if traders are entering the market, okay, this white line is telling us, are these traders long or are they short? If the line is getting higher, this white line is telling us people are longing. If the line is getting shorter, it's telling us people are shorting. Okay, so if this line is coming down as open interest is going up, it's telling us that people are shorting. So, you know, right here, as we see this massive increase in traders entering the market, as this line is getting lower, this is telling us there are massive amounts of shorts entering into the market here. Okay, now if, as we see right here, price is forming a lower high, yet it looks like there are longs entering into the market, then we have to ask ourselves, why is this uptrend now failing to put in a higher high? The reason is because there are retail traders who are saying, oh, we put in just a higher low right here, we're going higher, and so they're longing here. They're longing here, and they're putting their stop losses probably down below here. And what's happening is they're being absorbed. That's why price is unable to make a higher high, because there's a whale up here, okay? There's a whale swimming around up here, and this whale is filling up its short order, and it's using the retail traders' market longs to fill up a giant limit short. And once that limit short is filled, that whale is going to push the price to the downside. Now, when this happens at a key area, such as a Fibonacci golden pocket, which we know we have right here, right? We know that we have the Fibonacci golden pocket right here. Okay, and we see the bearish divergences on market Cipher B, and we see the absorption. This is now giving us confirmation that the head and shoulders pattern, okay, is in fact ready to get a move to the downside, and it's very probable that we will actually break down from that neckline and continue much lower. But this is giving us a much better entry from a high instead of waiting for a low to enter a short trade. It's a better risk to reward, and we're going to have more success trading this way. All right, guys, I hope you found this video helpful. If you did, make sure to like the video. Make sure to subscribe to the channel. Again, if you want to learn this stuff, check out the course at jasoncaspertrading.com. Take advantage of that 25% discount. Also, if you want to join the community, patreon.com/JasonCasper. It's a great community. It's a TA group, guys, but we really do enjoy helping each other trade, and there is a lot of teamwork in here, I do have to say. That's it, guys. God bless everybody in the name of Jesus the Messiah, and I'll see everybody in the next video. Peace.